Welcome back to the channel. This is Growing Wealth. Previously, I've summarized and reflected on my performance for my long-term portfolio, which had a 50% return in 2020, beating the S&P 500 by quite a margin. Watch that video if you'd like to know how I've achieved that result and also the opportunities that I'll be looking for in 2021. Now, besides my long-term investment portfolio, I also have a trading portfolio which I mostly trade options on. So in this video, let's take a look at how has that portfolio performed, and let's reflect on my 2020 journey and the strategies that I've used thus far. This is the annual consolidated statement from my brokerage Interactive Brokers for the year 2020. So for last year, my trading portfolio is up 83.88%, which fortunately has just hit the goal that I've set for myself last year. I've started the year with a net asset valuation, beginning NAV of almost 14,000. And my aim was to hit 25,000 last year, which was very close because we ended the year with an ending net asset valuation of 25 point almost 7k, right? Now, unlike my long-term portfolio, which had quarterly injections of fresh funds, my trading portfolio was just left to grow and compound by itself. So you can see there was no deposit and withdrawals into this account at all. All the gains that you see were purely from trading. If you look at the performance chart and the various indices, this is how it will look like. The left vertical axis is the net asset valuation of my account in dollar amount, and the right axis is the percentage gain of my account, as well as the several indices. What you are seeing in lines over here represents the percentage returns, and the blue bars represent the net asset valuation. And lastly, the horizontal axis is the time. The light blue line is the percentage return for my account at 83%. It is somewhere around here. And the light green line, the bottommost line that you see over here, is the performance of the S&P 500. So performance-wise, my trading account has beaten the S&P 500, without a doubt. Now, if you have been following the channel, you should have known that I was quite heavy on tech last year. So to be fair, it might make more sense to compare the portfolio to the tech index instead of the S&P 500 index. A more tech-focused index would be the Qs, the triple Q or the Nasdaq, and this is represented by the dark green line, the middle line that you see over here. And for the year of 2020, the Qs has given a return of almost 50%. So if we do a comparison against the percentage return posted by my portfolio, it is quite close, but fortunately, I'm still able to beat the Qs in terms of performance. Looking at the chart, you can see that my journey in 2020 isn't all that smooth. The portfolio was underperforming initially during this period of the time where my return starts to go in the opposite direction of the market. The market is going up, but my portfolio was losing money. And also there's this scary plunge over here, which I'll be going into more details later on in the video. The first half of the year, I've been focused more on trading calendar and diagonal spreads, both of which are options trading strategies. I will not attempt to explain what they are because I never managed to put it across in simple words. So do look out for the structured tutorial video for these strategies, which I aim to complete sometime this year. So let's focus on the first critical period of the year, which is March of 2020, where we had the COVID crash and the market just plunged 30% in a short span of a few weeks to a month. So during this period, I had a diagonal spread on AMD. And I must say that AMD is so-called my lucky star that helped me get that initial boost last year, and this stock also get me ready and prepared for the crash that came immediately right after. Looking at my personal trade log, this is the transaction journal for AMD. This is a trade that was brought forward from 2019 towards the end of 2019 in December, right? And the entire trade took almost 60 days to complete. And in these 60 days, which is the period of about 2 months, it gave me a return of almost $1,000 based on an initial capital of 2.4 thousand. So if we convert that into percentage P&L, that would be 44%. So this trade by itself is a huge winner. But if we look at the performance, the start of the year, I was still underperforming the market, slightly by a bit. And that was because the profit brought forward by this trade was partially neutralized by the losses that I have on my calendar spreads. Now you can see that basically before March, all my calendar spreads were losing positions. Having stayed in the trade for this amount of time, it still end up in a net negative P&L. bring down my whole portfolio during the first 2 months of the year. And the outperformance really came during COVID. As you can see, when the market plunged 30%, my portfolio has gained about 20%. So let's take a look at how that has happened. So if we go over to the chart of AMD, this is how it is looking like during that period of the time. And the duration of my diagonal spread on AMD was sometime around here to the peak right here. So like I've said, I was pre-warned of the COVID crash back then, not because of the virus and the pandemic itself, but because of AMD making a very sharp parabolic move upwards. So you have been listening to my other videos, I've always said that a parabolic 90-degree move upwards is to be considered very dangerous, and prices can anytime correct sharply back to the moving averages like what we have seen briefly after. Furthermore, because I was in a diagonal trade, if there was any sharp movement in prices downwards, I will stand to lose a lot because of the structure of the trade itself. So having seen this parabolic move upwards, I was getting ready to exit the trade when I saw the first red candle. Alright, so back then, when I saw this, I exited somewhere around here, getting all the profits that I can get. And who knows, immediately the next day, AMD fell even more, from a price of about $57 all the way down to like 53. So after I've seen such a huge sell-off in AMD within a day, it led me to take on some put options on AMD to profit off the temporary sell-off. Back then, having seen this kind of price action, I was expecting the stock price to target somewhere around the 50 moving average over the course of the next few weeks. But little did I know that my price target was quickly reached on the next trading day. And I still remember very clearly that this was a Friday, and when Monday opened, everything gapped down together with the S&P 500 and the other indices. Right, and this really marks the start of the COVID crash and the pandemic. Having reached the price target within a short span of one trading day, my put options on AMD were really giving quite a lot of gain back then. From there, I closed out the positions, and with my analysis on the SPY, having seen that within a week, the prices broke through the 50 moving average, and from there, I've been taking on put options as and when there was a rally, and I still remember day trading quite a bit back then, which led to my initial outperformance for the year. So overall, I would say that my protective put options on the SPY or the hedge against the market has been pretty successful because you can see as the market plunged 30%, my portfolio returns stayed sideways during that period. Now I know that the sell-off caused by the pandemic is going to be temporary, and I've been saying this in quite a few of my videos back then. So my aim was to allow my portfolio to gain some exposure to the low made in the markets, especially those stocks that are pandemic proof and fell for no good reason. Of course, I do not know when is the exact bottom, so I kept my positions small during that time. Going back to my trade log, during that point of time, all I have was a calendar position in EM and Microsoft. So they were taken on the 12th of March and the 13th of March, just 1 to 2 weeks before the exact bottom. Along with the way I managed the trade, it turned out to be quite profitable. So for these two trades, I was in them for a period of about 3 to 3.5 months. And you can see that the returns it has gotten me for these two trades. Microsoft is one of the biggest winner because shortly after the bottom was made, it went on to rally like nothing has happened. Because the pandemic has nothing to do with it at all, and in fact, it was benefiting from the whole scenario and the environment that we were in. So very shortly in May, you can see that the stock was nearing its all-time high already. Right, so this was one of my bigger winners back then. As the market recovered, I started taking on more positions. As you can see, I have Activision Blizzard, one of the stocks that I have said to be virus proof as well in my value investing analysis video. But I also have losers like Intel, which was caused by its earnings and the delay in its core operations. But from there on, my portfolio pretty much was in sync with the general market. Back to the chart, my performance only started to accelerate in September, this period over here, where the market was consolidating and my portfolio just shot up tremendously. That is because I was introduced to a new option strategy that is very profitable when executed properly. The strategy is known as the 0DTE SPX Iron Condor, and for those of you who are interested, you can check out the strategy tutorial on Wealth Enjoy. It is a 3-hour long seminar with in-depth details that you need to know for trading the strategy. And also shout out for Wealth Enjoy for hosting a series of enriching seminars to benefit the public on personal finance and investment matters. But I must warn that the strategy will require quite a lot of skills to manage properly. It is difficult not because of the trade structure, but what is required innately in the trader. In fact, the concept of the trade is very simple. It's just an iron condor that works pretty much like any other iron condor. But the danger lies in whether the trader is able to stay strictly disciplined in both good times and bad, knowing his or her risks and manage accordingly with a cool and calm mind. So as you can see, I have quite a lot to learn. During a period of low volatility, somewhere around here, the strategy works best because I was raking in profits. You can tell this from the slight exponential returns that my portfolio was giving. And because of this strategy, the low volatility in the general market and as well as a bit of luck, I was able to hit my goal of 25,000 for the year just in September and October. And from there on, I was thinking, can I push for 30,000? Because we still have one more quarter left, and that is a lot of time. And before I know it, I was blinded by the lucrativeness of the strategy and the goal that I have set for myself. I start to take things for granted, thinking that I've mastered managing the trading style well enough, and even start to disregard the risks that were involved, thinking that they were insignificant. Now, with this mindset, I've just set myself up for failure when the volatility starts to hit soon after due to the election uncertainty. That is this period over here. And you can see that my disregards that were going on in the trade has led to the portfolio plunging steeply over a few trading sessions. I saw my account go from a peak of 28,000 to 25,000 in a short span of a few trading sessions, and from there overnight to only a low of 19,000. Right, the entire week and a few days after that was really hard and devastating for me because I have to find a way to get back to 25k to hit my goal, right? As a reminder of how bad this is, when you have lost 20% of your account, you need a 25% return in order to break even, right? Not even profit, but just break even. So with a loss of about 25%, that is somewhere around here, I would say that I'll need a return of about 30 to 35% to even break even. So generally, the higher the losses, the harder it is for you to recover afterwards. And that is why capital preservation is so important. And I'm glad that my losses were not any larger than this. Right, so from the key statistics of the statement, you can see that the worst single day return was on the 19th of December. And that was the huge drop itself, representing a negative 23.43% return. So now we are on to the last quarter of the month. I need something to fall back on that I was more comfortable with, that can give me slight profits, as well as to let me regain my confidence in trading. Right, so during that period, I went on with bull put spreads. The complete strategy tutorial, both part 1 and part 2 have been uploaded to the channel, so do watch them and get familiar with the way I trade the strategy. Now, during the last 2 months of 2020, I wanted to fall back on calendar and diagonal spreads again because I have quite a fair bit of experience with them and have my way of generally managing with the different situations that I will be expected to face with. But the main problem for these two strategies is that the profits for them need some time to realize. As you can see from my previous trades, they took almost 2 months to sometimes even 3 months or 4 months for the entire trade to be closed out and the entire profits to be realized. So it is unlikely for me to hit my goal of 25,000 by the end of 2020 if I were to use the diagonal and calendar spreads. So I decided to take things one at a time and went for bull put spreads instead. So in October, I traded the November expiry, ensuring some profits for the month of November. And likewise, in November, I traded the December expiry, which helped to secure the profits that I need for December. Fortunately, I was still able to make it and ended the year with a net asset valuation of 25 points, giving an overall of 83.88%. And a lot of the credits really went to the bull put spreads that I've traded. From the trade log, you can see that this is a very profitable strategy. For the last 2 months of 2020, I've traded a total of 10 bull put spreads that expired latest on the last day of the year itself. Right, and out of all 10 trades, they were all winning trades. This is the profit and loss for the individual trades. Alright, so basing the P&L upon the block capital, this is the return on investment that you can see from each of the bull put spreads that I've taken. If we do a quick sum of the total profits that I've gained during these 2 months for the 10 trades that I've made, it brings us to a total of 3.1 thousand. Alright, so once again, bull put spreads, they are very profitable and have a very high win rate, especially in a sideways or a bull market. And the best thing about this is I have been actively sharing these trade ideas that I've taken, sometimes in the channel or over in our community chat that you can join over here. So make sure to subscribe to the channel if you do not want to miss out on more profitable trade ideas coming your way in 2021. And while you are at it, smash the like button so that you can enjoy our educational content. Alright, so that marks my journey for 2020. And for 2021, minimally I will aim to beat the S&P 500 again. Otherwise, why bother trading if you can't even beat the S&P 500? You might as well just buy the index and hold on to it for the long term. Other than beating the S&P 500 minimally, I'd like to aim for at least another 50% return on my ending net asset valuation as of December 2020. So hopefully I could end off 2021 with a net ending NAV of somewhere around 40k or even 50k. If I could double the portfolio, would be even better. For those of you who have a financial background and are more familiar with the other performance analysis, you can also see my Sharpe ratio over here for the portfolio, which is standing at 1.75. So basically, a Sharpe ratio of 1 is average, and anything above 1 would be good, right? And anything below 1 would be quite bad in terms of performance to the risks that you have taken to achieve that same performance. Let's look at this year thus far. In the blink of an eye again, January of 2021, the first month is over, and this is my portfolio performance so far. We have the S&P 500 giving a return at peak of about 2.6%, and only to give it all back during the last 2 weeks of the volatility and a slight correction in the S&P 500. So likewise, my portfolio has been outperforming the S&P 500, once again all because of the bull put spreads that I have been actively taking. So this is just a quick overview of the current positions that I still have left running. And from these positions, it has helped me achieve a peak of 11% return. And back then I was really happy because if I can get 10% return a month, I'll be able to hit my goal of a 50% return in a year very easily. Right, but nonetheless, you can see that my performance has been following the market generally. And as the market corrects, my portfolio returns give back some as well. And right now, at the end of January, I'm up almost 6% at 5.98. If we jump to the present on the S&P 500, this is currently how it is looking like. Prices are currently hanging on to the 50 simple moving average. So will this correct further? We will have to wait and see. And once it breaks through the 50 moving average, I'll be taking on more protective put positions on the S&P 500 again to hedge my account against a slight correction, such that my performance do not dip any lower, and hopefully I'll be able to successfully hedge against the correction, and that will lead to a sideways performance trend on the chart again. And as the market picks up from there on, then I'll be posting more trade ideas which we can consider to greatly benefit our trading portfolio. Comment below if there are other things that you'd like to know, and also let me know how has your trading journey been so far, your challenges as well as the rewards that you have reaped. Remember to leave a like and subscribe to the channel. Turn on the bell notifications so that you won't miss out on any profitable trading ideas coming your way. Thank you so much for watching and all the best for the year ahead.